Evergrande or Evergrande, China's Lehman's moment. Financial crisis 2.0 continues to unfold, where China's giant property developer Evergrande is the canary in the coal mine, tip of the iceberg. China's Lehman's moment that looks set to default on over $300 billion of debt. Here's what the giant property developer's stock price looks like. Now, I don't have time to dig deep into China's debt crisis right now, just that it illustrates the fraud that is China's corporate accounting. Why one should not get carried away with investing in Chinese stocks, as I often repeat, and hopefully people are taking notice of. Look at the chart. All those poor fools who bought at presumably a 50% discount during the summer months, when many fools on YouTube, for instance, were touting the stock as being cheap, have now all but been wiped out. There's no coming back from a 90 plus loss. The facts are this, that they are a lot worse than that which is known. Hence, we will only know the true magnitude of China's financial crisis and property crash or collapse with the benefit of hindsight. So start by discounting the worst possible case, which is a Lehman style collapse, as the Chinese dominoes start to fall. Given China's immature society, i.e. lacks accountability, then this could be a trigger for much civil unrest across China as the facts slowly emerge that it becomes known that the China Clown Party, that CCP, diktats were the trigger for this collapse. Though I'm sure Evergrande will be naughty boys fiddling the stats and figures, trying to entice investors in. I know they got their workers to invest in this garbage. Yeah, the wealth management programs, lots of what in the West would be scams, have operated in China's second largest property developer, and it will impact stock prices, obviously in China and the West. Stock market FOMO hit September brick wall. Dow 2021 trend forecast current state. My latest comprehensive analysis of the stock market has just been posted to Patreon. A full spectrum analysis that concludes in a detailed trend forecast into the end of 2021 and then continues all the way into 2022 with indications for what to expect even for the remainder of 2022. Analysis that had me dig deep to clear the mists of time, all the way to deep analysis of the seasonal trends on a scale that you will not see anywhere else, from the usual seasonal analysis that's expanded on multiple time frames to the new short-term seasonal trend and the presidential cycle, best time of year to invest in stocks, and a 2022 seasonal investing pattern, and then putting it all together into a final stock market trend forecast, and then coverage of AI stocks and my buying plan, as well as the high risk stocks portfolio. And then we take a look at Afghanistan, China, the comprehensive analysis that took me a good 2 weeks to do this analysis, and it's first made available to patrons who support my work. So do consider becoming a patron by supporting my work for just $3 per month. Lock it in now, because it's gonna rise to $4 per month soon. My last analysis, posted on the 1st of September, proved to be a timely reminder that an historically overbought stock market on virtually every measure was entering into the seasonally worst trading month of the year, that at the very least suggests to prepare for a significant correction with each passing day. And there was even a possibility of a market panic event, a crash, for which there are countless indicators that I've been covering since mid-June, such as what is taking place in the reverse repo market of a de facto brewing financial crisis 2.0, the magnitude of which we will only realize with the benefit of hindsight. Hence why I sold out to 80% of my top AI stocks during the summer months, with the last being to exit IBM, leaving my AI stocks portfolio in its current state. devoid for the first time in many years of the likes of Microsoft, Apple, Nvidia and Amazon, with holdings of Google and Facebook greatly reduced. Though at the time and since I have reiterated my intentions to buy back at least some of the less overvalued stocks during the second half of October as the probable conclusion of a market correction, which remains my objective regardless of whether the correction actually materializes or not, that this analysis seeks to clarify the magnitude of as the stock market tumbles from near its all-time high, the deeper we move into September, with my primary focus being on mapping out a trend into the end of the year that is now accompanied by a secondary projection deep into 2022. And again, for immediate first access to all of my analysis and trend forecasts, do consider becoming a patron by supporting my work for just $3 per month, due to increase to $4. Lock it in now. And here's the schedule of my forthcoming analysis. Silver price trend forecast, stock market trend forecast for September to December, how to get rich, which is 90% complete. This is patrons, exclusive to patrons. It's taken me a good 6-7 months more now, 8 months of hard work on this, and it's no BS, hardcore, telling you exactly how to get rich. Well, what I've learned from my 35-year career in trading, investing and in business, or what it takes. Straight to the point rules, no BS, no filler, just hardcore. Then we have a UK price trend focus, and I'll update my US house prices and a quick look at Canada and the US dollar and British pound analysis, and finally gold, which I'm not really interested in, but patrons asked for it, so I will look at gold. Silver first and then gold. Silver, since cryptos I've gone off silver and gold. I have positions in them, but not significant. So again, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. That is soon set to increase to $4. That's not much. I'm seriously underpricing myself. Some patrons say I should be charging 100 times. The quality of analysis you're getting is worth 100 times what I'm charging for it. But you have to remember that I'm coming from the vantage point of giving my analysis away for free, which I did for 15 years on the Market Oracle website. 15 years. And I was only forced to go to patrons because everybody was ripping me off, copying everything, and trying to deal with all these thieves was like playing that, hitting the thing on the head and another one pops up. It's point I just gave up. I go, alright, I'll try Patreon. If this doesn't work, then I'm gonna stop publishing my analysis. I'm just gonna trade and invest. But Patreon seems to be working. I'm actually capitalizing on my investment. Remember, I am a capitalist, I'm not a communist. So I have to capitalize on what I give out, so I'm not going to do it. So the Market Oracle website runs at a loss because everybody's ripped it off. There's no ad revenues and whatnot. So that was the way I capitalized on it before. And now I'm capitalizing it through Patreon to some limited degree. At least it covers the cost for Market Oracle and other online activities, so that's good. Anyway, enough of this waffling. See you in the next video. And do consider becoming a patron as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for over 6 months. It's more like a year now. And that's what I was saying last year. If you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. I bought a Karcher K7 for £340. Current price on Amazon is $565, and similar for lots of other tech items I bought. For instance, The components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis and do consider becoming a patron.